Okay, let's unpack this. Have you ever looked at a company as, well, as vast and complex as Amazon and wondered how to even begin making sense of it all? Its financials, its myriad of businesses, where it's truly headed, it can feel like trying to drink from a fire hose of information, right?
Absolutely. It really can. And that's exactly where a structured approach to analyzing the data becomes invaluable. Today, we're taking a deep dive into Amazon.com Inc. That's ticker symbol AMZN. We're armed with a comprehensive stock report, recent earnings analysis, and a good look at various analyst perspectives. Our goal is to cut through that noise for you.
Yeah, exactly. Our mission for you today is to distill all that information down into the most important nuggets of knowledge. We'll explore Amazon's current financial health, its strategic moves, and, what the future might hold, giving you a clear, well-informed picture without feeling overwhelmed by all the details. Think of it as your shortcut to understanding one of the world's most influential companies. So, let's kick things off by grounding ourselves with Amazon's current market snapshot. Where does it stand right now?
Based on our source material, the last close price for AMZN was $231.49 USD. But, I mean, what does that number really tell us in the grand scheme?
Well, what's truly fascinating here isn't just the price itself, but how the market is valuing the company as a whole. Our sources show a fair value of $230.36 and a specific price target from the report at $222.38 and its market capitalization. It currently stands at a staggering $2.47 trillion USD.
Wow, trillion. Yeah, trillion. And put that in perspective, that's larger than the entire GDP of many mid-sized countries. It really illustrates the sheer economic footprint Amazon commands globally. And when we look at ratios like its price to earnings, or PE, of 34.87, and its price to sales, or PS, of 3.68, these figures broadly indicate how much investors are willing to pay for each dollar of Amazon's earnings or revenue. A higher PE, for instance, like this one, often suggests investors anticipate significant future growth.
Okay, so this valuation snapshot gives us a sense of where Amazon stands today. A big company, high expectations. But to truly understand its recent trajectory, we need to dive into their latest earnings report, which, as you mentioned, sent out some very mixed signals, caused quite a stir in the market. Can you unpack those for us?
Indeed, it was interesting. Amazon actually delivered robust financial results for Q2 2025. Net sales increased 13% to $167.7 billion. Then operating income surged a remarkable 31% year over year to $19.2 billion.
Okay, those sound pretty great.
They were. Both of these comfortably exceeded their own guidance, and both North America and international segments showed strong growth. However, despite these impressive numbers, the market's reaction saw AMZN shares actually tumble.
Right, that's the confusing part. Why?
Well, this immediate dip wasn't really about the current performance. It was primarily driven by concerns over the growth rate of Amazon Web Services, AWS, specifically relative to its major competitors like Microsoft and Google, and also a weaker than expected Q3 operating income outlook they provided.
Ah, the outlook.
Exactly. It highlights a key investor psychology. For high-growth companies like Amazon, it's not just about today's strong numbers, it's tomorrow's expectations that really move the needle.
That makes sense. And it's quite telling that despite that immediate dip, the average analyst price target within the last 6 months, according to our sources, is still quite a bit higher at $256.50. That suggests maybe a longer-term bullish view despite those short-term jitters.
That's a fair interpretation, yeah. The analysts seem to be looking past the immediate reaction.
Okay, now let's peel back the layers and examine the engines driving Amazon's colossal operations. When we talk Amazon, we're really talking about like a multi-headed giant. Let's deep dive into its three main powerhouses, starting with the cloud computing titan, AWS. What's the story there?
That's right, AWS. It reported $30.9 billion in revenue, growing 17.5% year over year, and it now boasts an annualized run rate over $123 billion. Huge numbers.
Still sounds like massive growth, 17.5%.
It is massive growth for a business of this scale. But the key insight here is the market's disproportionate reaction. They perceived a deceleration relative to rivals, especially with everyone increasing AI spending. This really underscores how critically investors view AWS as Amazon's primary growth engine. Any sign of slowing, even minor, creates significant jitters.
Right.
Highlights the intense competition in cloud.
Okay, and what about margins? Did those hold up?
Good question. Its operating margin actually declined. It went from 39.5% in Q1 down to 32.9% in Q2.
That's a noticeable drop.
Well, the report points to a few things. Largely a seasonal step up in stock-based compensation, basically paying employees more with equity. Also, higher depreciation from substantial capital expenditures, or CAPEX. That's the money spent on big assets like data centers. And unfavorable foreign exchange rates played a role too.
Got it. So multiple factors hitting the margin there. Investors are sensitive to any perceived slowdown, even with huge growth still happening. But how does AWS itself view this? Are they signaling worry about losing ground?
Not at all. Publicly, at least.
Yeah.
AWS asserts its market leadership. They note it's meaningfully larger than its closest competitor, and they're aggressively, really aggressively investing in its generative AI stack,
Like what kind of investments?
developing their own custom AI silicon like Trainium 2 with Trainium 3 already in development, offering NVIDIA Grace Blackwell superchips, which are, top tier for AI processing, and enhancing its Bedrock platform with advanced models like Anthropic's Claude 4 and Amazon Nova. Big names, big tech.
So they're betting big on AI within AWS.
Huge bets. But this heavy investment does come with short-term challenges. They also face supply constraints, primarily power and chips.
Supply constraints. Interesting.
Yeah, and they expect those to take several quarters to resolve. What's crucial here, though, is what that implies. It indicates that demand actually outstrips current capacity.
Ah. So the deceleration might not just be slowing demand, but their ability to meet the demand.
Exactly. It suggests the issue is less about waning customer interest and more about Amazon's ability to provision enough infrastructure quickly enough, especially for those power-hungry AI services.
That's a really fascinating point. Demand outpacing supply. Okay. So while AWS is investing heavily for the future, what about the core retail experience that everyone knows? And that booming advertising arm, how are those performing?
Right, beyond AWS, Amazon's foundational retail business continues to drive impressive efficiencies. They've re-architected their U.S. inbound network,
Yeah.
leading to a new global speed record. Same day or next day, deliveries are up 30% year over year.
30% faster on average. That's significant for customers.
It really is. This operational excellence is key to maintaining customer loyalty. And a research firm, Profitero, has consistently concluded for 8 years running that Amazon offers the lowest prices of any major U.S. retailer. That reinforces its e-commerce moat, its competitive advantage.
The moat, right. Stale logistics pricing power.
Exactly. Plus, the expansion of its perishables pilot and another record-breaking Prime Day also underscore strong customer engagement. Retail is still very strong.
Okay, solid performance in retail, holding on to their dominance. What about the advertising side? That feels like it's exploded recently.
It really has. The advertising business is a truly significant growth engine. Revenues were up 22% year over year to $15.7 billion.
22%.
Yeah, huge growth. And it's fueled by Amazon's vast proprietary data and audience reach over 300 million ad-supported users. That's an enormous pool. They've also forged strategic partnerships with platforms like Roku and Disney's real-time ad exchange, further expanding their reach. It's a high-margin business that leverages their unique customer insights. Very lucrative.
Makes sense. And is this mostly a North America story, or is international picking up too?
International is definitely showing strong progress as well.
Yeah.
Revenue there increased 11% year over year, excluding foreign exchange impacts. And operating income significantly improved to $1.5 billion. That's a really positive sign for their global expansion efforts.
Good to see. Okay, so AWS growing, but facing scrutiny, retail efficient, advertising booming, international improving. How does this all tie together financially? You mentioned CapEx earlier.
Right. If we connect all these pieces to the bigger financial picture, a key takeaway from the report is the substantial decrease in free cash flow, FCF. FCF, is essentially the cash a company has left after paying for its operations and capital expenses. It's a crucial measure of financial health and flexibility. For Amazon, FCF was $18.2 billion for the trailing 12 months. That's down sharply from $53.0 billion in the prior year period.
Wow, that's a massive drop. Over $30 billion less in free cash flow. What's driving such a significant decrease?
Well, this steep decline is largely a direct consequence of those aggressive capital expenditures we talked about. They're projected to be around $31.4 billion quarterly for the second half of 2025.
Quarterly. $31 billion.
Yeah, huge sums. These investments are primarily aimed at expanding cloud infrastructure and fulfillment networks, particularly for AI innovation. So while this definitely impacts short-term cash flow and might give some investors pause, the report suggests this is a deliberate strategic choice. It positions Amazon for substantial long-term growth as cloud services and generative AI applications accelerate.
So they're sacrificing cash now for future dominance, basically.
That's the argument. It signals Amazon's willingness to make these aggressive long-term bets on AI and infrastructure, demanding a unique kind of investor patience. may be different from typical market focus.
That's a truly massive investment. Okay, beyond those core established segments,
Yeah.
AWS, retail, advertising, what new initiatives is Amazon highlighting? Things that could be their next big growth engines. Are they diversifying enough?
That's a really important question about diversification. And Amazon is certainly cultivating new growth avenues. We see Alexa plus S, the next-gen AI assistant, rolling out. Reports suggest positive feedback and potential for entirely new subscription and advertising models, going beyond just simple voice commands.
Interesting. What else?
There's Project Kuiper. That's their ambitious low Earth orbit satellite constellation. It just completed its third successful launch and has secured impressive agreements. The aim is global broadband connectivity, think providing internet to rural areas or for disaster relief.
Satellite internet. Okay. Competing with Starlink eventually.
Potentially, yes. And then there's Amazon Pharmacy, which continues to show robust growth, up 50% year over year, a significant play in the healthcare sector.
50% growth in pharmacy is huge.
It is. And in entertainment, Prime Video Live Sports is gaining considerable traction. NASCAR seems to be drawing significant younger audiences, and the highly anticipated upcoming NBA season could become a massive draw for Prime Video.
Right, live sports are a big battlefield. It's also interesting how they're not just building AI externally for AWS customers, but applying it internally across the company to boost efficiency. That seems like a smart way to maximize their investment.
Exactly. They view AI as, and I quote, the biggest technology transformation for a lifetime. They see it impacting everything, from how their developers write code, using tools like Hero, to improving call center productivity with AWS Connect. The underlying goal isn't just about cutting costs. It's about allowing employees to invent faster, making their jobs more enjoyable by automating repetitive tasks. That ultimately drives innovation and efficiency everywhere.
Makes sense. Okay, so as with any major company, especially one as vast and dynamic as Amazon, there are always different viewpoints on its trajectory. Our sources present a compelling look at what both the bulls and the bears are saying. It's important for you, our listener, to see these diverse perspectives so you can weigh the arguments yourself. Let's start with the case for the bulls. What are they emphasizing?
Okay, on the bull side, analysts really emphasize AWS's continued market leadership and its strategic AI investments. They see that as the absolute key to capturing the explosive generative AI opportunity. They also point to Amazon's operational excellence in retail, highlighting those efficiency gains and strong customer engagement, plus the high-growth, data-rich advertising business as a significant and probably growing profit driver.
And the new ventures.
Right. The diversified portfolio with emerging ventures like Kuiper and Pharmacy, and those strategic long-term capital expenditures. Even if they impact short-term cash flow, the bulls see them as crucial for positioning Amazon for substantial future growth in new markets. The view is very much that Amazon is playing the long game, and these are necessary investments.
Okay, that's the optimistic view. But the bear case is equally important to understand, offering that critical counterpoint. What are the main concerns from those with a more cautious outlook?
For the bears, key concerns include that perceived deceleration in AWS growth and the fluctuating margins. They see that as a potential sign of market saturation, or maybe just increased competition taking a bite. This is compounded by those ongoing supply constraints that limit current capacity, meaning Amazon might be leaving revenue on the table in the short term. Can't fulfill all the demand.
And the spending.
Exactly. The significant capital expenditures impacting free cash flow are a major short-term worry for bears, as it reduces financial flexibility right now. They also point to intensifying competition across all segments, cloud, retail, advertising, you name it, and the market sensitivity to growth expectations, meaning any perceived slowing, even minor, could lead to continued stock volatility. We saw that after the Q2 report.
Sure.
And finally, broader macroeconomic and regulatory headwinds. Things like potential tariffs or increased antitrust scrutiny, those pose ongoing risks that could impact profitability down the line.
Right. So it's clear that Amazon is a company in transition, really. Balancing these massive investments in future-defining technologies like AI with optimizing its established, incredibly profitable businesses. It really highlights that tension between short-term financial metrics and long-term strategic vision.
Precisely. The information suggests a company totally willing to invest heavily in what it believes will be the next major technological transformation. Even if it significantly impacts short-term financials, it really prompts us to consider the long game required to truly innovate at this kind of scale.
What a deep dive. We've unpacked Amazon's recent financials, its strategic bets in cloud, retail, and advertising, and weighed those different analysts' perspectives. It's a company that's constantly evolving with a very clear vision for the role of AI in its future.
Indeed. It's a prime example of a company making very deliberate, very large bets on what they believe will be the future, pretty much regardless of immediate market reactions.
And that brings us to a final provocative thought for you to mull over. Given Amazon's massive and ongoing investment in AI infrastructure, particularly within AWS, and its stated belief that AI is still in its very early stages, what does this imply? What does it imply about the kind of patience and long-term vision required from investors in truly transformative technology companies? And how might that contrast with typical quarter-to-quarter market expectations?
That is a fascinating question to consider as these powerful technologies continue to unfold and reshape entire industries.
Definitely something to think about. We hope this deep dive has given you a clearer, more insightful perspective on AMZN. If you found this discussion valuable and want to stay well informed on other complex topics like this one, make sure to subscribe to our channel and hit that bell icon. Your support really helps us continue to bring you these in-depth analyses.